It's the Real Estate Podcast, brought to you by ANZ Home Loans for financial well-beings.
Hey, welcome back to another episode of the Real Estate Breakfast as we talk your property news. We do that 7 days a week, even into the new year. And you can catch us on iHeartRadio, Spotify, Apple Podcast and Amazon. And just a quick note here, if you are a new listener, if you want to join in on the conversation, you can do that. Our email address is myrealestatepodcast@gmail.com because we love to hear from you. Now, it's a Saturday morning, January the 4th, and we are running the summer series of real estate. But this morning, our mortgage finance guru is back for the very first time in 2025. And as we step into a brand new year, Australia faces a cooling economy, persistent inflationary pressures, and robust employment numbers, factors that have kept interest rate relief firmly on hold. What does that mean for the housing market in the year ahead? Well, here to share his insights and predictions, as I mentioned, for the first time in 2025 is Anthony Landau, the Managing Director and Mortgage Broker at Equilibria Finance. Good morning to you, Anthony. How was that Christmas and New Year for you?
Good morning, Craig, and Happy New Year. It's great to be here for the first time. And yeah, Christmas time was fantastic. Had the family round, ate too much, had a great time. Yeah, just had some nice time between Christmas and New Year to wind down a little bit. It's been a nice time to relax and refresh, as I hope everybody has been able to do a little bit of the same.
I remember the last time we spoke just before Christmas, I was saying when you sit down to have that Christmas meal, don't be thinking of the RBA. Is that what happened?
I've managed to put the RBA to one side for the last couple of weeks, thankfully. So yeah, it's been pretty quiet on the housing front and talk of interest rates. It's been nice to have a little bit of downtime.
Well, perhaps for the listener this morning who might not have heard us talking a few days before Christmas, maybe you can do a little bit of a recap on how the 2024 year concluded and what you think that outlook for 2025 is going to be.
Yeah, just to recap briefly, I suppose, we saw the end of 2024, I guess, with momentum leaving the market. We had national values increasing about 5.5% over the last 12 months in 2024, but that momentum was slowing. The last 3 months of the year only saw an increase in 0.5%. That was nationally. We'd seen strong growth in Brisbane, Adelaide, Perth particularly, and Sydney was quite strong. Those 4 markets all relatively had eased as well. And we're actually seeing some negative growth in Melbourne, Hobart and Canberra, and Darwin as well had some negative growth. So we had a little bit of a split market, but fundamentally we were seeing momentum leaving the market with a decrease in demand as people took a cautious approach with affordability buying. But there was more stock on the market and a bit of a shifting outlook around inflation and interest rates.
Yeah, so when we look at 2024, the breakdown, the key moments across the year, there were many that kept people up at night. Too many, of course, to cover off in one podcast this morning. But we expect that, don't we, in real estate? Many traders on the stock market have said to me, no, real estate bounces around way too much for me to invest. I fire back, of course, are you crazy? Compared to shares, real estate is more stable. But there is no convincing some people, Anthony. So I'm wondering, what are your key factors that you think that might sort of shape the housing market this year in 2025?
Well, look, in terms of an asset class, just to quickly touch on that, the housing market's risen about 43% over the last 5 years. So that's pretty strong performance. And as with any asset, you want to take a bit of a longer term view. But some of the key factors that are going to shape the market into the new year are probably the factors where we left off at the end of last year. affordability is really biting. Home buyers are struggling to save a deposit. It takes about 10 years now to get to that 20% deposit. Over 50% of household income is being used to pay the average mortgage. So cost of living pressures and affordability really going to be impacting home buyers, first home buyers, and we've seen that reflected in an easing of credit flows near the end of the year. I think the obvious things that are sitting out there that are still going to impact is inflationary pressures. I don't believe we're out of the woods on inflation yet. I think a lot of the headline inflation numbers are now being driven by domestic factors. I think that we're also seeing the inflationary numbers a little bit masked by some of the rebates being offered around rental and energy. We're seeing a government that's spending money out of control with an election approaching. So a lot of people are looking at the inflationary numbers and potential flow-on effect through to interest rates. And obviously we got an election in the first half of 2025 of this year. I think a lot of the factors that are going to impact supply and demand are going to come down to maybe some caution for buyers with inflation and interest rates and the election. And for sellers, we are seeing more stock onto the market as well. So we're probably getting a bit more parity between buyers and sellers coming into 2025 as well.
It is our Saturday Real Estate with Anthony Landau this morning. When we come back, we'll talk about just how owner-occupiers and investors are behaving in this market, and we'll find out what Anthony's advice is going to be for those that are looking at entering the property market in 2025. We'll talk about that the other side.
Every morning from 6 a.m, we bring you the latest real estate news with diverse perspectives from leading industry experts. We deliver the most property podcasts across Australia every week.
And right now it is time for another property tip, and we are catching up with Ileana Rohan-Thierry of Better Real Estate there in Canberra. And you've got another property tip for us this morning.
Another property tip indeed. I guess something which people do bang on about a bit, but the most important thing when out hunting for a property is to have your ducks in a row, have your finance ready to go. If you find the right property, you can jump on it straight away.
Yeah, we've talked about this because there's nothing more frustrating, because you don't want to put yourself into that frustration mode where you've found the ideal property and you're just not finance ready. And the whole thing with finance ready, there's a lot to that, and you must see that all the time.
We do, unfortunately. There was a couple of properties we've sold recently where we had a handful of buyers not quite ready to go. They loved it and they came back a few weeks later and they missed the opportunity. So not something you want to be put in if you're not ready.
And I think the other thing too with existing property owners is sometimes people will look at this bridging finance, which is really, you don't want to go down to the bridging finance if you can avoid that.
Correct. I mean, if it's avoidable, but if it means that you can transact and you're not having to rent in the middle or be homeless, certainly an option. You've just got to make sure you're working with a really reliable team that have got all their ducks in a row and they can make sure that you can transition from, one property to the next seamlessly.
Yeah, and it is a great time of the year to catch up on all of those podcasts, because we've got well in excess, I think it's about 1,100 of these real estate episodes that you can digest. And if you are looking at getting into the property market, what better resource at your fingertips? Anthony Landau is with us on our Saturday morning. In any one year, Anthony, it's really interesting just the way that the owner-occupiers and the investors behave, what that sentiment is, how they're spending, whether they're retaining, whether they're selling. So what's your overall sort of picture outlook on how the owner-occupiers and investors are behaving in this current environment?
Behavioural factors are massive in terms of how they influence the market. And obviously behind that, you've got the economy, you've got that reflected in prices and supply and demand. But owner-occupiers, I think, are very much going to be coming into this year with a cautionary approach. And that's reflected in some of those factors I raised before around inflation, interest rates, cost of living pressures. I think a lot of owner-occupiers are a bit of a wait and see, but I also think owner-occupiers, when the opportunity comes up at the right price, are willing to purchase. So demand, I think, will stay a little bit subdued. We're still, as an asset class, even though we're losing a bit of momentum, there's still very, very strong areas of capital growth for the investors to be able to capture. I think behaviourally, owner-occupiers, first home buyers are going to continue to take a bit of a cautionary approach. It is about opportunity over the next 6 to 12 months with this extra stock, with those areas still of strong capital growth. A lot of them are back in the regions as well. So that's how I see the owner-occupiers and investors playing out over the next 6 to 12 months.
Now, you might be somebody that has been saving for years and you've had 2025 in your sights, particularly if you are in Sydney. It can take you up to 10 years to save for your deposit. But if 2025 is your year, this is the year that you're going to get the foot on the ladder, then let's hear about it. Let us know what is happening all around that. And Anthony, it's a big one, so perhaps you can give your advice for those that are planning on entering the property market this year.
There are going to be some opportunities this year. I think fundamentally for those looking to enter the market for the first time, it's really about understanding what you're able to do. People have a certain size deposit. People have access to different government schemes, whether it's federal government schemes with the low deposit programs, whether it's the stamp duty programs of the state governments. So really understand what you can do and think about your options. There's opportunities sometimes for first home buyers, if they can't buy where they want to live, to maybe think about buying an investment property. Take your time. It might be, we're talking to some people at the moment where they're on a program to save their deposit, and it might be they don't buy for the next 6 to 12 months, but they understand where they need to get to, what they need to do, and what their affordability looks like. Particularly with interest rates potentially more likely now to come down over the next 6 to 12 months, people can really understand their budgets, their repayments, and their affordability. For people upgrading, what's really, really important is to understand your buy-sell costs, to understand also if you're looking to upgrade from a unit to a house, are you actually able to do that with your family? Because the median price between units and houses in some areas is making that very, very difficult. I think for anyone looking to either enter the market or upgrade or consider construction, the frenzy's out of the market. There's a bit more time to be considered, to think about what you want to buy, where you want to buy, and just take your time to understand what you can do and then get your pre-approval in place with your mortgage broker so that when the opportunity comes up, you're ready to capture that and you're ready to buy.
Yeah, the frenzy is out of the market. That pretty much sums up where we're at the moment in a very early 2025. All right, I can hear the surfboard squeaking away, wanting you to jump on it and go for a surf. So enjoy your weekend.
Yeah, no, it's still summer holidays, so that's exactly what I'm going to do now. But it was nice just to catch up and start thinking about, what's on the horizon in the housing market, because the murmurings will begin in the next couple of weeks with people starting to get out and about again.
Unlock the secrets of real estate and stay informed about the latest real estate buzz with hot market trends, emerging suburbs, and hidden gems.
Have you had anybody that have said to you, look, Dominic, I want something that's kind of like a Downton Abbey?
Yes, I do, but they're quite rare. The very grand ones, like your 30, 40-room houses. The problem is sometimes they do come on the market, but they come with, they might come with 1, 2, 5,000 acres, which prohibits the person that wants the house. That's the problem. Whereas most people that want the house, they're really after your 20, 50 acre gardens or allotments.
In Downton Abbey, they've got the pulley, the strings where they ring the bell, and there's a central area where those bells go off. Are there any properties in Australia that have got that sort of system?
Yeah, the servants' bells. I do come into historic houses where they're very intact and things like servants' bells are still there. You don't see a lot of it, but, there are very intact original houses that I walk into.
We connect you to the best real estate information across Australia. The Real Estate Podcast.